Well, good afternoon and or good evening, traders and friends right around the world. You're here with James on behalf of Pivot Point Trading. I'm bringing you this Tuesday afternoon market recap because it is the first signal which we have to tell us, or at least indicating us, be very cautious if you are in any bullish trades or if you have higher highs forecasted across all three of the US markets. It has been a little bit of time since my last YouTube update. The reason why is because we have been expecting this bullish rally right up into these three red boxes. This is what I call resistance areas, not only on the Dow Jones Industrial Average, but also on the S&P 500. As you can see, this red box has been drawn on my screen since the capitulation throughout the month of August, and also on the NASDAQ. We're still not as high up, or we haven't actually moved into the red box yet. But the reason for this recording is that I'm going to walk through a few pieces of technical analysis warning me that potentially we have finished, or at least are very close to finishing this slope of hope bullish rally, or what we call a correction during the early phases of a bear market. And potentially we are set to once again roll over and at least come back down and retest the respective lows dating back to mid to late September, and also the capitulation in the month of August. It isn't a definitive signal yet, but as at the close on Tuesday, we are starting to see some very, very ominous warning signals once again to suggest tighten your stops on any bullish trades if you have taken this little counter trend move to the upside, and also be thinking about the potential for some bearish trade opportunities in our top 12 individual trade list. Now, I assume that this recording, which I'm doing for you as at this Tuesday, will probably go for about 10 or at least 10 minutes. So if you want, make a nice cup of coffee or a tea, settle in and just listen to what I have to say about this market and why I'm so concerned about where we are currently trading at as at the close on Tuesday. The best place to start this discussion, first of all, is probably with the Dow Jones Industrial Average. Even though the candlestick hasn't really set up on this particular market, it's more so on the NASDAQ, but I do want to start with the Dow Jones Industrial Average. First of all, I want you to pay attention to the volume. I mean, since this slope of hope rally, which we have been once again forecasting and expecting, what has the volume been doing during the bullish move higher? That's meant to be a question mark. Sorry for my poor drawing skills on my MacBook as I use my mouse to do or use and operate this pen drawing tool. But the volume itself has been significantly decreasing the further we have been moving higher and higher, not only on the Dow Jones Industrial Average, but also on the S&P 500. Have a look at the bullish volume trailing off during this bullish move higher. It's getting to the point, I mean, today's volume isn't current yet, but have a look at the NASDAQ as well. It is absolutely trailing off. This is telling us that there aren't a whole lot of people actually buying into this slope of hope rally. It's also telling us under the surface of this bullish move higher, it probably has a lot to do with what we call a short squeeze. This is people or traders, investors who have positioned themselves short, but are having to buy to close their positions during the market, or as the market continues to run their stops as it pushes on up higher. So this is a lot of foolish people, potentially, and I mean that very respectfully, who have positioned themselves at the wrong time, or at least the wrong location on the chart, and as such, price has moved against them. They are closing out of their shorts, they're buying to cover, and it's adding to the very limited fuel which is pushing this market on up higher. Also, another left field type of analysis technique which we have a look at during these types of moves and what we call correction moves during the early phases of potentially a bear market is where is the 100 simple moving average and where is the 200 simple moving average. Not only where are these simple moving averages, but where is price action in conjunction to these simple moving averages? First of all, the simple moving averages give us the long-term trend direction of the overall market. And since 2009, if I can zoom out and show you this on the closing price, I'll show you the weekly chart because it really gives us enough data to work with. Really since, I guess, 2010 when we got the cross, 2011, price has remained above not only the 100 but also the 200 simple moving average. Now, what we've seen most recently throughout the year of 2015, if I zoom closer in on the detail, is that price itself is now below. Now, this isn't a macro bearish signal in and of itself. I'm just trying to bring up the right indicator for us right here. But it's at least warning us that, look, the 100 and the 200, which usually acts as support during a bull market, is now going to act as resistance in the beginnings of potentially a transitional period into a bear market. Here we are. We've got the 100 simple moving average coming in at 17,294. Here's the price action where we closed at on Tuesday. Pardon me, 17,081. So for my quick maths, we have a maximum move of about 200 points to the upside. until we start interacting with the long-term simple moving average. On top of the 100 simple moving average, we have the 200 simple moving average. This is coming in just shy of 17,600. So I'm going to round that up to about 500 points, all the way up to the 200 simple moving average. So we can say to ourselves, look, during the initial formation of what could be a backtest, generally price comes all the way back up to the 200 simple moving average before we see a legitimate or the first legitimate rollover. So we're sort of saying right now we've got an area of between 200 to 500 points. I'm just going to write 200 to 500 points as to how much higher this market can technically move before we start to at least have to reconsider our long-term forecast and long-term outlook on the market itself. Not only that, but what we can see also when we talk about overbought and oversold in terms of momentum or oscillator indicators is the fact that look at where the stochastics has been or where it's transitioned into. What we are seeing right now is a very, very overbought reading. So it is moving in conjunction with price action. We have got the bullish cross, and that's really added to the momentum to the upside. But as you can see, not only the stochastics is very much overbought, as it has been, at various times throughout or since June, as you can see on my screen, when we get these really nice sell signals, we're starting to push into the very much so upper limit of the stochastics reading. Also, we've got the RSI moving into a very, very overbought state as well. And the MACD is definitely still giving us a bullish signal, but this is always late to the party in terms of a legitimate signal. You want to be paying attention to the stochastics and also the RSI. The RSI is much faster. It does use a faster calculation. It's a 9-period moving average on the RSI. It factors in the past 9 trading sessions. And as you can see, we haven't been this overbought on a potential market, or on this potential market at least, since February 2015. So you can see that we've just simply rallied back up into a very overbought state on the markets. And on top of that, in conjunction with the 100 and the 200, we're also for the first time retesting old support dating back to the month of December 2014, January and February. Old support, new resistance. And that's really showing us where this first box or this big red box is coming in line with the Dow Jones Industrial Average, right around this figure here, about 17,126. So we're trading on very light bullish volume. We're very much so overbought. We've got various levels of overhead resistance. We've got so many warning signals that even if this is a correctional move to the upside, we can potentially see the first wave of a rollover taking place very close to where we are currently trading on the Dow Jones Industrial Average. On top of that, today's candle has been what we call a spinning top candle. This is telling us that once again, bulls and bears are very much undecided in the current or in the future direction of the market. This is just a state of confusion. And this is why I'm bringing you this update, because when I change to the NASDAQ, all right, you can see that we have a very different looking candlestick. This isn't what we call a spinning top type of candle. This is what we call a shooting star candle. And shooting star candlesticks at resistance and only at resistance are a very good indication, once again, that we've exhausted the bullish move to the upside. Let me just quickly go through some back testing with you as to where other shooting star candlesticks at resistance have been and how they have significantly or how they have played out, after the actual signal itself has formed. The last time we got a candlestick very similar to what we have seen during today's trading session was dating back to the 17th of September. Very similar type of candle, isn't it? You could almost say they are more or less identical. Have a look at this. The only difference between these two candles is that one of the candlestick bodies is dark, the other is white. All this means is that the one which we saw today, the close was actually below the open. So as you can see, we closed down 42 points. If we have a look at the candle dating back to the 17th of September, we closed above the open. That is why the candle itself is white. What is most important, however, is what happens after the candle is formed. You see the rollover. It wasn't the biggest rollover, but definitely a rollover in and of itself. Where was the last time we saw another shooting star candle? Have a look at this one right here. What happens next? We roll over, and that was moving into the August 2015 waterfall sell-off. I'm just dragging my mouse further, going back in time. I haven't scripted any of this whatsoever. I'm just looking for the next signal, which we got in terms of a shooting star candle, and I think that's really exhausted it at least through to the beginning of 2015. 2 or 3 major setups in terms of a shooting star candle right now, most recently as of the close today, being Tuesday afternoon. It's in the perfect location. Things are looking very good for the signal itself to set up. And I just wanted to warn people out there, if you're unfamiliar with technical analysis, and at least you want to have an understanding or a better footing of it, have a look at this pro analysis class, which is up on our website right now. You can sign up and have a look. It goes for 2 hours. It's broken into 2 one-hour sections where I go through with a very comprehensive market update and at least walk through why these areas are so important for the market's health moving forward. Not only rounding out 2015, but also what's going to happen for this market in the year 2016 if certain criteria is met. Now, that criteria which I walk through isn't met yet. I mean, we haven't ticked off the boxes, to suggest that, look, definitively we are moving into the continuation of a bull market, or to say the polar opposite of that argument, or at least outlook or forecast, is to say, look, we're moving into a 2016 bear market. We haven't ticked any of the boxes yet. The word at the moment, or most important, is yet. We will find out. It may happen as soon as October 2015, or if we see once again legitimate resistance at these long-term simple moving averages, if I can bring up the right indicators again for you. But we're getting very close to a legitimate signal. Now, again, today, we do not have a signal in and of itself which suggests what the market will do 100% or with certainty, but definitely on the NASDAQ here, you need to pay attention to this signal. You can see it over and over again, a nice little rollover on the NASDAQ, also on or leading into the capitulation in August 2015. I'll see if the similar types of candlesticks set up on the S&P 500. Yes, they did. Another market which I just want to bring your attention to is the Dow Jones Transportation Average, because surprise, surprise, have a look at some of the candlesticks which we see again. Shooting star candlestick very early on in the month of August. This was actually the 5th of August. On top of that, another one most recently in September on the 17th. What happens next? We see the sell-offs. Let me show you another one over here. This is somewhat of a shooting star right here. What happens next? We have this sell-off. We're below the 100 and the 200 prices below. We're finding rejection at the 100 simple moving average. You see all of these boxes being ticked, this criteria. We get a very good understanding of price direction when certain signals set up. So that's why there has been a break between these YouTube updates. I've specifically put out updates in the past. You can coordinate this with the dates on my YouTube channel as to these particular candlesticks and the analysis or subsequent analysis, which I did, alerting people to what could be potentially another sell-off. Now, today we didn't see the shooting star candlestick. Instead, we saw that long day Morobozu candle. This is just a bearish signal, all out bearish. Yesterday, we saw what we call a little hangman type of candle at resistance. Again, another bearish signal, but we don't have the shooting star candlestick. So it is one point of difference between that of the transports and that of the NASDAQ. And also, for that matter, the S&P and the Dow Jones setting up with those spinning top types of candlesticks. Today, on the transports, we got that Morobozu bearish continuation to the downside. So for anyone to say that, look, this correction, and if they're still bullish on the market, the correction is a bearish pullback, to say at least that the bearish correction is over is definitely too premature. We may be in the midst of a much bigger move. Time will tell, but now's the time to be taking on specific hedges, or at least long-term outlooks, to sort of position yourself as an insurance policy if you know how to trade options or puts. Again, I cannot tell you specifically what to do, but this is definitely the retest of the market where we should get a very good understanding of what's going to happen next. So just be cognizant of this. If you have any questions whatsoever, email me. Now is not the time to be looking at bullish trades or bullish setups on the market. It's more so to be setting up some bearish rollover trades given the signals which have just presented themselves today as at Tuesday. What I can quickly do is walk through some trades. Walgreens Boots and Alliance, have a look at this downtrend right here. Very nice bearish trend on Walgreens Boots and Alliance. Tesla is floating around that 215 entry. I sort of held off on this trade as I spoke about over the weekend, a dotted line. But if we crack below 210, I will put this on. Now that we have this first candlestick, which I spoke about over the weekend, have a re-listen to what I said. Very interesting to see that play out on Tesla. Netflix, once again, has got earnings coming out released tomorrow. So we do not have a trade on Netflix. IBM, perfectly poised for a rollover type of trade. Goldman Sachs, again, if this didn't have earnings, this has got bearish rollover written all over it. I would just simply scoot my bearish entry below here. That's just a gimme trade, such an easy trade. But unfortunately, we have earnings, I think, released tomorrow or in 2 days' time, pardon me. Google, no bullish trade setup. We are at a macro resistance area. Wait for the rollover and the short on Google. CVX is just perfectly primed for a rollover. 8609. Comprehensive trade analysis again in that pro class. Have a look at it. Caterpillar, we may be able to squeak a trade out of this. I'm not too sure. Earnings for this stock is on the 22nd. So it is going to be somewhat of a dash. That comes in at a Thursday week. So we do have about 6 trading sessions until we will need to exit Caterpillar. I do not have my mind made up on Caterpillar yet. I'm more so personally looking at long-term positions on the diamonds and also on the Qs, which I'll be looking to enter into based on the nice enough rollover and confirmation of a bearish move. Baidu again moving sideways, no trade triggered. Boeing Airlines, a perfect trade setup, definitely in this red box. Have a look at this resistance level right through here. Very similar to Walgreens, Boots and Alliance. We've got limited upside. If I change to the 100 and the 200 simple moving averages, have a look at this. We're right in between the 100 and the 200. But what's most important is that we are just below the 200. The perfect location for a rollover trade on Boeing Airlines. Amazon, if my screen wants to work with me, it is going through. It is acting a little bit slow at the moment. 513.40, a very nice bearish trade setup right there. Looking really nice. No long trade setup on Amazon. And to conclude with Apple, you can see why I'm hesitant about this 112.93. I will not be taking the bullish trade. I'll be waiting on the bearish trade somewhere below 103.92. It's hard because we are moving into earnings. I understand that. It sort of hinders a couple of trade setups, but at the same time, we've got some really, really great trade setups on the overall indices themselves. Now's the time to be setting up those rollover types of trades, or at least hedging long-term positions on the US markets, because this is essentially the back test which we've been waiting for since the breakdown in August. It has happened somewhat faster than what we thought it would. There was the potential always that we can come back down to these August lows and then see the slope of hope legitimately set up to the 200 simple moving average, which may set up over and throughout November and December 2015, but we'll just break this down as a day-by-day proposition. Again, I cannot stress enough the importance of the 100 and the 200, and again, that limited upside, I think, between 200 and 500 points all the way up to that 200 simple moving average. That defines your risk, and that's the best way to trade US or any market for that matter globally, is to define your risk, understand how many positions or what you can take on as per risk management, and then execute the trades and let them just play out during time or over time. So have a fantastic Tuesday evening, everyone. If you have any questions, email me success@pivotpoint-trading.com. But a very important Tuesday afternoon market recap, which I'm bringing to you right now. Pay attention to the NASDAQ shooting star candlestick. Go back and see what's happened in the past after we get these very important or early reversal signals at very important levels of macro resistance. All the best, traders and friends. I look forward to meeting hopefully some new people, and also I will be responding to a lot of emails which I have had over the past 2 days. I'm trying to work through them all. I've got a lot more to answer. And you have my word, over the next 2 to 3 hours, I will be sitting down and personally responding to all of these emails as I see fit. All right. Have a fantastic Tuesday evening, everyone. I'll be back with you during the week again just to see this continuation play out. All the best. Goodbye.